Hi guys, my name's Jeff Teague. I'm with U.S. Bank Home Mortgage here in Dallas, Texas. I was asked to give you guys a comparison what the difference is between, renting your home and also purchasing your own home. So the biggest way to explain these two things is, they can serve two purposes. If you're looking for a shorter term, you're not exactly know where you're wanting to live, or where you want to work. You probably don't want to buy a house. That would be a good time to maybe look at renting. The other benefit of renting, of course, is there's little upkeep. So, for instance, if you have a house and your air conditioner goes out, if you're renting the home, all you do is pick up the phone and call the landlord, and the landlord comes out and gets it fixed. On the other hand, if you own your home, you're going to have to call somebody to come out, fix the AC, and that bill's on you. So, if you're on a tighter budget, not really sure what you're wanting to do, renting's probably a good thing for you to take a look at doing, just because it gives you more flexibility. One of the negatives of renting, of course, is, say for instance, over the course of a 5-year period, you're paying $1,000 a month to rent. After that 5-year period, you have paid your landlord about $60,000, and at the end of that 5 years, you don't have anything to show for it. On the other hand, when you're buying a home, it's a longer term investment, and it's a great way to build wealth. And what I mean by that is, for instance, say for instance, in that same scenario, for $1,000 rent, you might be able to buy a $150,000 home with a 10% down payment. That put the loan amount down around $135,000 with a $1,000 payment. Over that 5-year period, you will pay down that balance down to about $117,000 on your loan. The other thing to consider is over that 5-year period, your home will probably appreciate in value. So if you bought the home for $150,000, 5 years later, it may be worth, say for instance, $170,000. So the difference between the 117 and 170,000 would be about $53,000 in equity you have built up. And equity simply means the difference between what your home is worth and what you owe on the house. So at the end of that 5-year period, you'd have about $53,000. And what that would mean is if you ever decided you want to sell that home, maybe purchase another home, you would have that $53,000 available after you sold your home, less whatever the closing costs were on that home. So, you'd be paying $60,000 in monthly payment, but at the end of that 5-year term, you'd actually still have around $53,000 to work with in equity. Whereas on the rent side of things, that money's essentially gone once you have it. But if you're looking to buy a home, a couple things to keep in mind. One, it's a longer term play. So if you know where you want to live, you know where you want to work, buying a home would certainly be an option for you. A couple things to think about when buying a home is the down payment. There's programs out there depending on where you're wanting to buy, what your income is. It could be 0% down all the way to whatever down payment you wanted to do. A lot of first-time home buyers put less money down just simply because they haven't saved enough money to put a larger down payment down. So, what I would encourage you to do once you get to that point is talk to a mortgage loan officer, a licensed mortgage loan officer that can give you some advice and give you some scenarios on what you'd be looking at payment-wise and all those types of things. But the number one advice I want to give you guys about credit, whether you're renting, whether you're going to want to buy a home one day, is to make sure that you keep your credit score in good shape. Pay your bills on time. Don't overextend yourself. It's going to give you a lot more flexibility when you get out into that market to want to look at homes. It's going to make your interest rate lower, which will allow you to buy more home for less money. Same thing with rentals. The housing market's so competitive right now in the DFW Metroplex. Is landlords are looking to, they'll do credit checks. They want to make sure that you're going to be able to pay for the rent, and you'll have more opportunities if you have if you stayed on top of your credit and had a good credit score. It'll save you thousands of dollars throughout your lifetime if you have good credit versus not having good credit just in interest charges alone. So that's my biggest advice to you. But keep in mind, there's a place for renting. There's a place for buying. That's what you guys will have to decide once you get to that point. So I hope I was able to give you guys a little bit of insight on what the differences are. That's pretty much all I had for you. Appreciate you guys, and thank you for giving me the opportunity to come and talk to you guys today. Have a good day.